Welcome back to the Dinar Chronicle. I'm your host, and today we've just received breaking updates on the Iraqi dinar, live on the Forex market. The atmosphere in the financial world is crackling with anticipation, and we're monitoring this situation in real time as trader activity intensifies. If you're watching right now, please pay close attention. This could be one of the most significant currency revelations we've seen in months. At this very moment, the Iraqi dinar, IQD, is trading live against the US dollar, and the data is both surprising and potentially game-changing. Earlier this morning, around 9:30 Greenwich Mean Time, we noticed a blip in pricing data, a tick upward that startled Forex desks and currency analysts alike. What appeared at first to be a minor fluctuation soon blossomed into a more pronounced surge. The IQD briefly surged from its usual trading range of approximately 1.4621 for 64 per USD to a peak of 1,420 per dollar. That's roughly a 3% shift, an eye-opening move in the currency world. As of now, at 10:10 Greenwich Mean Time, the live market quotes have settled nearer to 1,430 IQD per USD. That's still a strong 2% appreciation compared to yesterday's close, and it has traders scrambling to adjust their positions. What's driving this sudden revaluation? Institutional traders are pointing to a confluence of supply and demand dynamics, shifting central bank policy expectations, and a wave of renewed investor confidence in Iraq's macroeconomic direction. Let's break down the factors at play. First, there was an announcement overnight from Iraq's central bank indicating plans to bolster foreign exchange reserves. According to their statement, they intend to acquire an additional $4 billion in reserves within the next quarter, funded through a combination of increased oil revenues and targeted swaps with regional economic partners. This is being interpreted as a pledge to stabilize the dinar and reduce volatility, which in turn has catalyzed stronger appetite for the currency. At the same time, we're seeing sizable inflows from private hedge funds and carry trade desks taking advantage of the interest rate differential. Rates in Iraq currently stand at approximately 10.75%, compared to roughly 5.25% in the US. That 525 basis point spread remains attractive, particularly in a context where global yields have stabilized and liquidity remains ample. Investors appear to be borrowing in low-cost funding currencies, swapping into IQD short-term assets, and locking in the yield pickup. Additionally, oil market behavior is amplifying the momentum. Iraq's crude benchmark is up nearly 4% in the past week, hovering around $79.50 per barrel. Higher oil prices translate into stronger balance of payments fundamentals for Iraq. They mean more USD inflow from exports, reinforcing confidence in the currency's underpinnings. Middle East traders who focus on petrodollar capital flows are interpreting the higher oil price as extra validation for this move in the dinar. We're also hearing reports that some large regional development banks and sovereign wealth funds are coordinating efforts to bring structural stability to the Iraqi economy in advance of upcoming international bond issuances. The timing is no coincidence. Iraq intends to tap global debt markets before the end of Q3, and having a stronger, more stable dinar, as reflected in a narrower trading band, improves investor sentiment and allows for tighter issuance terms. These coordinated signals appear to have triggered automated trading algorithms linked to central bank communication channels. As confirmation signals and sentiment indicators were broadcast, those algo trading programs kicked into gear, pushing on already thin. The dinar liquidity pool in major trading hubs like Dubai and Istanbul isn't deep. That double impact, human and machine buying, has magnified the move. To put it in trader parlance, we're seeing a classic short squeeze. Retail traders were positioned short on the dinar, anticipating gradual depreciation. But once the narrative turned, institutional movers forced those shorts to cover, fueling fast upside movement. That's what caused the price to spike from 1,462 to 1,420 in just over an hour. Market depth charts we've reviewed show that volume spiked significantly at the 1,4401 for 30 level as algorithmic bids swept through. With the nearest substantial liquidity now lying at 1,400, speculators are weighing whether there's a path toward 1,380 in the coming days. But caution is warranted. Once the dust settles, Iraqi central bank officials may step in to manage any runaway movements or absorb excess volatility. We've also examined cross-currency dynamics. The dinar's rise against the dollar has triggered a ripple effect. Against the euro, the currency has appreciated around 2.3%, now trading near 1,520 IQD per euro. Volatility in the euro to US dollar pair has amplified this cross-effect, but the underlying story remains the dinar's newfound firmness. Turning to regional geopolitics, for those who track these linkages, today's developments coincide with new headlines on Iraq-Saudi economic collaboration. Media outlets are reporting the signing of a trade corridor agreement that includes dollar swap facilities. Although details remain under wraps, these swap lines could provide the central bank with additional USD liquidity, supporting the dinar and alleviating currency mismatches. Now, from a macro investor perspective, this raises questions about central bank independence. If the Bank of Iraq is signaling readiness to stabilize via reserve accumulation and swap lines, some global monetary watchers will match that against potential currency interventions. Market consensus leans toward this not being a speculative ploy, but rather a strategic buildup of strength. That said, until open market operations or June reserve data is released, there will be speculation. In the futures space, traders are already repositioning. On intercurrency futures for IQD/USD, margin demand surged, leading to a lift in the futures curve, with 3-month forwards now pricing around 1,438. That's a forward premium reflecting both the yield differential and spot appreciation. The cross-currency basis swap market for USD/IQD tightened noticeably, indicating reductions in offshore USD funding costs for Iraq. For you watching this live, you're witnessing a textbook case of Forex dynamics. Central bank guidance, yield arbitrage, commodity fundamentals, geopolitical agreements, and algorithmic flows converging in real time. However, it's not all straightforward. Some analysts warn that this could be a bull trap unless structural reforms in Iraq, from banking sector modernization to anti-corruption efforts, demonstrate real follow-through. Without that, today's surge could unravel as quickly as it formed. We checked with banking insiders who confirmed that on-the-ground dollar demand in Baghdad and Basra has remained subdued. Official pricing windows are still restricted, and physical reserves are being rotated rather than released in volume. That supports the idea this move is more liquidity-driven than based on domestic currency circulation. The timing is critical here. With tomorrow's release of the US CPI and Fed governor testimony looming, global markets may recalibrate. A US dollar rebound could dampen the dinar's move. It's exactly this interplay of local versus global drivers that makes today's event so fascinating to institutional watchers. In terms of next steps, keep your eyes on forward-looking indicators. We expect minutes from the Central Bank of Iraq's July meeting to be circulated later this week. If they confirm a policy shift toward greater FX flexibility or reserve accumulation, that could reinforce current sentiment. Conversely, if they describe the move as temporary or designed solely for banking liquidity, that may cap potential gains. Another critical data point: trade balance figures for May will be released in 2 weeks, and there's risk embedded there. If oil exports remain robust and non-oil trade improves, it strengthens the case for a revalued dinar. If not, opportunistic players may unwind positions. Let's also acknowledge counterflows. Some large importers in Iraq rely on USD and may be pressured if the dinar stays elevated. That demand dynamic could push USD buying back into the market. We already see short-term rebalancing trades taking place among banks trying to hedge these exposures. For our professional viewers, liquidity remains thin. If the dinar tests the 1,400 level,